In this presentation, we will take a look at multiple choice questions related to responsibility accounting, going through the questions and then practicing test-taking skills with them. First question. A company uses advisors who work with all customers in all divisions. The most useful allocation basis for the salaries of these employees may be A. Number of services offered in each division, B. Sales rate, C. Square footage of each division, D. Number of customers advised from each division, or E. Relative salaries of division heads. Let's go through this again using the process of elimination. A company uses advisors who work with all customers in all divisions. The most useful allocation base for the salaries of these employees may be. So we have these advisors, they work in multiple different divisions. We need to apply their salaries to the divisions that they work in. They work in multiple divisions. How do we do that allocation? We can use some type of activity base to do so for a ratio type of analysis, which would be most appropriate. A, number of services offered in each division. Now we might think, well, if there's more services in one division, then maybe that would be a good ratio to use to allocate. So I'll keep that for now. B says sales rates, and again, that we might tie it to sales for each division, because that you would think that the person would spend more time within the sales of one division. C says square footage of each division. Now this is often used for some types of allocation, but usually like rent or something like that, possibly utilities. Doesn't seem like it would be appropriate. Square footage doesn't necessarily mean they're going to spend more time there advising. So D says number of customers advised from each division. Now, if we know that, that seems fairly reasonable to do, because that's what they're spending their time doing as advisors. And then E says relative salaries of each of division heads. We could use that, but it doesn't seem like the most direct and appropriate thing to use. So let's go through it again. A company uses advisors who work with all customers in all divisions. The most useful allocation basis for the salaries of these employees may be number of services offered in each division, sales rates, or D, number of customers advised from each division. Now, I would think it would be between sales or basically the number of customers advised, because that's what they're doing. They're advising the customers. If we know how many customers are being advised in each division, we can use that ratio analysis to apply out the salary, and that seems to be most directly applied to what is actually being done for the company. So I would think D is the final answer. A company uses advisors who work with all customers in all divisions. The most useful allocation basis for the salaries of these employees may be D, number of customers advised from each division. Next question. Rent and maintenance expenses are often allocated based on A, sales volume by division, B, number of employees in each division, C, number of hours worked, D, number of invoices processed, or E, square foot of floor space used. Let's go through this again. Rent and maintenance expenses are often allocated based on either A, the sales volume. Again, you might think that would be a normal type of allocation base to use. And remember, again, we've got rent and maintenance expenses. They're going to be on multiple different departments. Our goal here is to say which department are we going to apply these to, and how are we going to apply it? We can't just divide it out because they're different sized departments. So how can we apply out the rent? What would be the best activity base to use that ratio to allocate? So B says the number of employees in each division. And again, that might be reasonable in some cases, but for the rent and maintenance, the number of employees, maybe, because more employees might have more maintenance after them and whatnot. And then C says the number of hours worked. And again, that seems kind of reasonable. And then D says number of invoices processed. For rent, probably not. And then E says the square foot of floor space used. And that's another common kind of usage that we would use. So of those, let's go through this again. Rent and maintenance expenses are often allocated based on what would be the best driver for rent and maintenance? The sales volume, number of employees, number of hours worked, or the square foot of the floor space. Usually a lot of times with rent, we'll end up with the square footage of the floor space. because that's what we use usually when you think about the value of something, the rent, it's based on square footage. And maintenance oftentimes is going to be higher based on square footage as well, although that might not always be the case, because if you have vacant areas, there's not much maintenance going on there. But in any case, E is probably the most common for rent and maintenance. So final answer, rent and maintenance expenses are often allocated based on E, square feet of floor space used. Next question. Department's sales excess over direct expenses is A, net income, B, gross profit, C, departmental net income, D, contribution margin, or E, departmental contribution to overhead. Let's go through this again using the process of elimination. Department's sales excess over direct expenses is net income. Sounds kind of reasonable, but it sounds a little bit different because we're talking about department and over direct expenses. Gross profit, again, sounds kind of reasonable, but it sounds a little bit odd with this context as we look at a department. C says the departmental net income. So between A and C, C sounds like it would be more kind of normal. We might convert it maybe from net income to departmental net income, and maybe that would be the case. D says contribution margin, and this isn't really where we are calculating basically the contribution margin. That's in CVP analysis. And then E says the departmental contribution to overhead. And that sounds like it could be the one as well. So let's go through it again. Department's sales excess over direct expenses is the gross profit, the departmental net income, or the departmental contribution to overhead. And of those, gross profit is a financial accounting term, so I'll eliminate that. And between C and E, it's going to be E here. And this is going to be when we talk about responsibility accounting, it's going to be the important item that we're going to have, because we're basically thinking about those costs that are still going to be there, or at least when we think about the costs that are going to be there in terms of should we keep the department going or not. The department contribution to overhead is going to give us the items that are going to be contributing to overhead. In other words, if we eliminate the department, then we would still have those costs that are within the calculation of the departmental contribution to overhead. The other costs are going to be allocated, and we want to recognize the fact that the allocated costs may still be there even if we were to, say, eliminate the department. So we want to allocate them for decision making, but we also want to have a note of the departmental contribution to overhead by the department. Next question. A system of performance measures that includes non-financial measures. A, observation report. B, time-based management. C, balanced scorecard. D, residual income. Or E, investment turnover. Let's go through this again using the process of elimination. A system of performance measures that includes non-financial measures is A, observation report. Maybe it's non-financial, so that you may. B says time-based management. Sounds like a term, might be reasonable. C says balanced scorecard, and that sounds reasonable. D says residual income. Yeah, that sounds like a calculation. I don't think that sounds right. E says investment turnover. And again, that sounds like a ratio type of calculation, not really a full system. So let's go through it again. A system of performance measures that includes non-financial measures, either A, observation report, B, time-based management, or C, balanced scorecard. And of those three, the one we're looking for is C, the balanced scorecard, in which case we're going to basically take into consideration different variables, not all financial variables. And so final answer, a system of performance measures that includes non-financial measures, C, balanced scorecard.